Hi, it's Joe Mazumdar, Exploration Insights at the March PDAC edition of the Metals Investment Forum in Toronto. And with me right now is the president of Liberty Gold, Jon Gilligan. John?
Hey, Joe.
And Chief Operating Officer, which is important because Liberty Gold is basically transitioning into an exploration and development company. So I guess, how do you do both at the same time, given your market cap, your resources, human and otherwise?
Well, it's always a competition for treasury. How much cash you've got in the treasury? We're doing quite well in our treasury at the moment. We've got probably at the end of the year around $9 million. That'll get us through the pre-feasibility and through the permitting program that we're planning. We also have explorations to get back into the field and do some exploration. That's got to get funded separately. So we'll be working on that over the next few months.
And some of that's divestments.
That's correct. Yeah, we have a divestment opportunity for our assets in Turkey. So I think that is a great non-dilutive source of funds to put into the drill bit in the States. The reason that we're doing the pre-feasibility study is twofold. First of all, we didn't do a PEA. And so there's really no economic study out in the market that really sort of dimensions the opportunity here from a mining perspective. And secondly, you can't get into the US permitting process until you complete a pre-feasibility study. That then allows you to write a thing called a mine plan of operations. That is then submitted to your federal agency, in our case, the forest, and that formally kicks off the US formal permitting process, which is called NEPA, the National Environmental Policy Act. And there's a whole series of stage gates through that, but it all starts with an engineering study at PFS level. So that's driving us right now to get relevant.
Okay, so in terms of starting the permitting and the kind of throughput, there's potentially a throughput that you could do that a company of your size, capital, might want to ramp up to whatever throughput, but a potential suitor might want to do something completely different. So how do you manage that in terms of permitting strategy?
That's a fantastic question, Joe. I think the purpose of the pre-feasibility study is to sort of do an alternatives or an options analysis on any given deposit. So you would look at what's my maximum NPV mining case? What is my maximum rate of return mining case, minimum payback? What is my sort of maximum initial capital investment? And what is my minimum initial capital investment? And those plans get flexed in the mine plan. So you have to decide things like production rate and cutoff grade. As you know, Black Pine's is around about a 0.5 gram. So it's a relatively low grade, but in that zone for deposits in the Great Basin. There are many mines operating today.
But we're run of mine, we're not crushing.
We're not crushing, run of mine heap leach. So, reasonably low operating cost for the heap, $2 a ton, $3 if including G&A, and then whatever mining cost. When we do the work with the platinum optimizers, to figure out what's the mining rate, what's the sinking rate, and how much material we'd put on a heap, the sort of maximum case that we're looking at the moment is in the 50 to 70,000 tons a day. That's a pretty big operation.
Yep.
That would have a material movement rate in the mine of 150,000 ton a day, something like that, which is a pretty decent.
Oh, you're talking about a processing throughput versus total mine throughput.
Correct. Total mine 150, processing about 70. So 1-to-1 strip. So that will be around about a 0.1 cutoff grade. That would be, in principle, the sort of maximum capital, longest payback, but highest NPV case.
That a suitor might look at.
Correct. Right. So that's what they, a big company would probably do. They wouldn't have a capital constraint, typically.
So you want to make sure that your plan sort of incorporates that potential.
Very definitely. We want to be able to demonstrate what this thing could do if you kind of turn it up. The other end of the spectrum is, instead of dropping the cutoff grade, you raise the cutoff grade and you increase the head grade to the heap, but obviously at a lower processing rate because you've got less material at that higher cutoff grade. Yeah. And that allows you to design and permit a smaller case, 20 to 30,000 tons a day, at a significantly lower initial capital, something that perhaps would be more attractive to a company like ourselves to go and raise those funds. And you've got a higher cutoff grade. You have, and as a result of that higher grade to the heap, shorter payback, better rate of return, so less risk, if you like, against metal price, but a lower NPV for that particular project.
Right.
So logic tells me, if we're going to do this, you'd start and you'd permit that sort of smaller case.
And do
You'd articulate
modifications.
exactly. You articulate the big case, you permit the small case, and then you tell the authorities, we're coming back in year 4, 5, or 6, or whatever it is, and we're going to have expansion 1 and conceivably expansion 2 as the exploration drilling that we're planning to do brings in more ounces into the resource over time.
Okay, so in terms of near-term catalyst, the big catalyst right now is the PFS.
Very definitely, yeah.
Right.
I mean, the resource model was one. We completed that in February. That got us over the 3 million indicated ounces, which is the sort of core for the mineral reserve that we get published out of PFS. Then finishing the PFS, we're saying internally...
That's Q3?
Yeah, internally Q2, and then the publication will be Q3. Right. And then that will then lead into the mine plan of operations, which will get published in Q4 this year.
So you will start the permitting process.
Very definitely. We've already done a soft start. In September last year, we submitted a thing called a pre-plan of operations, which is somewhat analogous to a conceptual study. And we presented that to the US Forest, who's our lead agency. They then convened a multi-agency meeting. In fact, we've had 2 already, where the project is sort of, hey guys, this is coming up. We've announced that we would be submitting the mine plan of operation next year. So the agencies, state, BLM, and federal forest and BLM are assembling their internal teams, and they have to have teams of specialists to get ready for it. So we're trying to front-end load that process in a meaningful way so that once we submit, the time from submission to a decision is as short as practical.
All right, well, that's it for me. Joe Mazumdar, Exploration Insights at PDAC, Metals Investment Forum in Toronto, with the President and CEO of Liberty Gold, Jon Gilligan, who are looking not only to go into production, but also expand their current 3 million ounce deposit of oxide open pit heap leachable gold in southern Idaho. Thank you very much,
Thank you,
Jon.
Joe.